Hello and welcome to the Money Show. I'm Kavita Thapliyal and today we are going to have a very interesting discussion. India today is at an interesting crossroads. While global markets are showing signs of slowdown and uncertainty, India continues to stand out as a resilient, fast-growing wealth creation engine. And now one of South Africa's largest and most respected financial services groups, Sanlam Investment Group, is deepening its India presence through a strategic partnership with the Shriram Group. So what does this mean for Indian investors? How will this global-local collaboration shape India's next phase of financial growth, and what kind of opportunities can investors expect from it? Now, to discuss this and more, I'm joined by Karl, Ruthman, CEO of Sanlam Investments Group, and Vikas, Satija, MD, CEO of Shriram Wealth, as we decode the future of wealth creation, cross-border investment access, and investor empowerment. Welcome, gentlemen, to this very special edition of the Money Show. And Karl, let me begin with you because first, let's understand the big global view. When we look at the global picture and when we talk about the global markets, they are still showing signs of sticky inflation. Some markets and economies are slowing down. But when we talk about India, India is still seeing solid growth and strong investor participation. That has been the story post-pandemic specifically. So from Sanlam's global lens, if we just want to understand, how do you see India's position in this current environment?
So thank you, and thank you for the opportunity to participate in this program. India for us is a very exciting opportunity. So if you think about the world, I mean, you talk about a global-local partnership, but throughout the world, I think you're going to see some structural shifts where I think more the US and the West world will invest a little bit more in the West. Europe will invest a little bit more in Europe, and then you're going to see significant investment and growth in Asia. So as interest rates are coming down a little bit, there's a little bit of talk about slowdown in growth, opportunities for the rest of the world. Emerging markets definitely stands out, and I think you're going to see a significant shift in our view over the next couple of years to emerging markets. And within emerging markets, India is an absolute standout opportunity. So to be able for us to partner with someone like Shriram in the Indian economy, where you have it's consistently between 6.5% GDP growth. You've got a growing population, you've got a growing middle market, you've got a very investor-friendly regulatory environment, you have a government that I think are making all the right decisions to grow the local economy. For us, within that, then if you look at the different opportunities and where you want to invest, India, although you've had a slowdown in markets over the last year, but if you think through the cycle, I think this is an exciting opportunity and significant growth in the Indian market over the next 5 to 10 years. And that's why we think a lot of investors would invest in India. That's why we're interested in this partnership and growing the financial services industry with Shriram in India.
Sure. We'll dive deeper into that, Karl, but then let me just come to Vikas now, because Vikas, you are at the heart of that India story that we are discussing, with more Indians investing, saving, seeking advice. From your perspective, what are investors really looking for today, and how is that changing, from just a few years ago?
Yes, change what you see in the investor sentiment is that look at where the markets have been. I think you have been getting monies regularly coming in through SIPs, which clearly gives you the confidence today. You have 30,000 crores of retail money coming in every month, which tells you the story that even in this year of the calendar, when you have negative outflow from the FIS, market has still been there. I think it clearly speaks volumes that the way investors are maturing and looking forward to investing from a retail perspective, long-term perspective, I think that's the biggest change which one is seeing in the industry today.
Very interesting. We will dive deeper on the tier 2 and tier 3 trend also of investment and investors that we are looking at. But before that, Karl, let's just talk about this partnership and strategy. Sanlam and Shriram have worked together for years now, but this new phase seems much deeper and more strategic. What's changing in the India roadmap for you, and where do you see this partnership heading next?
So Shriram has always been a very important partnership for us as Sanlam, and Shriram was our and India is a very important market for us. So over there, we've been partners with Shriram for more than 20 years. Shriram over the last couple of years also made the decision that they want to increase their penetration in the asset management and wealth management industries. And with us as a global emerging market company with a very specific focus on growing and protecting our market share in South Africa, growing our presence and market in Africa, and then very specifically with Shriram increase our growth in India, we think this is a fantastic opportunity to actually bring more of our expertise to this part.
I want to understand from Vikas. Vikas, how does this help? And what new will you get on the table for Indian investors now? How does it make the wealth experience more research-backed, transparent, and globally connected? If you could just break this down in layman language.
Like this. Today, as far as investors were concerned, we had only investment opportunities to look within India. Now you have a global partner which has walked into with us where we can get the global access in terms of investing sitting into India in various opportunities. So India's story is hot, but at the same point of time, I believe there are opportunities across other emerging markets or other global opportunities, which one can sit in their own homes and still can go ahead and invest. So that's where you can bank upon people like us. When we have a partnership with an international player like Sanlam, we can come together and offer those global expertise together. Sanlam has more than 100 years of experience. So that comes in very handy as far as our set of investors are concerned to take that expertise.
All right. Vikas, I'll take one more question with you because I really want to understand now the kind of distribution and reach that you're looking at, in the entire wealth structure, in the entire AMC structure. We are looking at investors wanting for more. We are looking at new set of investors who want to experiment with their investments. We are looking at wealth advisory that's going big in the country. So what is your next step? What is the kind of shape that you want to give to this entire investment domain of yours?
Formally launched it in June. Today we are close to 11 cities with 150 odd professionals working in. Our sense is that over the next 5 years, you will see us to be at least 500 wealth professionals with 50,000-60,000 crores of assets, which we want to manage and advise. See, the biggest thing which is opening up is that in tier 2, tier 3 markets, I think there's a huge opportunity which is coming in because the kind of wealth getting generated is huge. The way GDP is growing and with Viksit Bharat next 20 years, you see this number to be 9 times, 10 times from the current numbers. I think clearly the opportunity is that every nook and corner of Bharat is where you will have opportunities to create wealth and wealth managers like us to go and cater to them and manage their wealth.
Sure. All right, Karl, let me just, we want to understand the kind of global setup in terms of global trends in investments that you are witnessing, that you might think that India also would want, or you might want to explore that with Indian investors. So, a very big theme, Karl, over here is access. Now, and definitely you're giving that access to Indian investors, exposure to global products, sustainable investing and ESG-focused opportunities. How does your group definitely open doors responsibly? At the same time, we would want to understand how these concepts, according to you, will catch up in India also.
Okay, it's a very good question. So I'm going to start with global trends, and then I'll get back to the local Indian market. So from a global trend perspective, what we see is that the world is moving from what you call manufacturing products to manufacturing solutions. And what we mean with solutions is that if a client has a very specific needs, and they would like to meet those needs and within a specific risk spectrum. And what we do with solutions is we put different products together to provide the client the right solution with the lowest risk profile and obviously at the best price. So the world is moving from manufacturing products to actually manufacturing solutions, and we are probably one of the strongest emerging market players in solutions. So I think that is also going to come to the Indian market. Instead of just buying, let's say, gold or silver or property or equity, that we're going to start building those solutions, and you'll see significant growth in the Indian market. The second trend is there is a movement to what we call more passive type of strategies, but passive is an ETF. So a significant shift to passive and ETF type of strategies. We are the largest player in South Africa by far. We have a 38% market share. But in that, we're also building what you call actively managed ETFs. So you're building different products into the ETFs, but the price comes down, and you can actually build that into your solution. So that's the second trend in the world. And then the third is you're also seeing more money moving into alternative investments, which means that one of the biggest alternative investment classes that are growing at the moment is private credit. As banks and the regulatory environment became more difficult, and banks are retracting a little bit from private credit, you see more private credit providers stepping in and providing that, which is a different alternative. So private credit, real property, private equity, infrastructure. So those are basically the three trends globally. So from an Indian perspective, I think it's going to happen in this market as this market keeps developing, and that's actually the expertise that we will bring to the clients. So you'll probably see more solutions for our clients. You'll probably see a mix of different products in the client set, and then we will start bringing alternative asset products to that. And the alternatives will just give you a little bit of a different risk profile. So what's also important from an ESG perspective is that we probably two weeks ago we were actually quite active in India. So we have a fund called Climate Fund Managers that's based in Den Haag in the Netherlands, and that is probably one of the most recognized and most successful climate fund managers in the world. So we currently manage $2 billion through green energy, renewable energy, solar projects. That was our Fund 1. Fund 2 was water projects, water to waste projects in Africa, in emerging markets. And Fund 3 is green energy. But what you will see, all of those funds and everything that we do actually has an ESG component. We measure the impact on people's lives. We measure impact on carbonization in the world. And we bring that into our portfolios, because a lot of clients are looking for an investment return, but they're also looking for a social return in those projects. But what's very exciting for us is our climate fund is also looking at significant infrastructure projects in India. They're going to become a very big investor in India. So we actually start looking at the bigger ecosystem with India. So we're going to provide product to our clients. We're going to invest in big infrastructure projects in India. And hopefully over time, we can bring those opportunity sets to our clients. But all of those opportunity sets would be in line with ESG principles. But it's also, my last point, what's important, and we see the same in South Africa and Africa, is that what is ESG important for Europe and the developed world might be a little bit different for the emerging market world. So I think what's important in India and in South Africa is job creation is important, social impact is important, schooling, healthcare is important. So we keep on developing product and investing through our alternatives into those type of strategies where we make a difference, not just financially, but we make a difference in the economies that we operate in. And that's exactly what we were going to try and achieve, this what we did in Africa. We're going to try and achieve with Shriram in India as well, so that we not just get clients with good solutions, but we also make a difference in India, and we invest in India, and we try and make India a better place for everyone from a healthcare, education, ESG perspective, together with our partner Shriram.
Vikas, back home, when we look at financial services, and especially if we look at big banks, a lot of investors feel underserved by big banks, especially the mass affluent and emerging wealth segments. Now, whatever Karl highlighted, the kind of innovation and the themes that he want to work with you and serve the Indian investor, how are you addressing that gap and building the trust-based long-term relationships over here?
As you mentioned, and I think that's the theme for us, we are going to work on solutions rather than going on products. So I think it's important that we put the right solution in place first, then do a risk analysis of the client's portfolio, and then put across which products do come into suitability point of view. On the point which you just mentioned about banks and others, I think there is only 15% professional wealth management being done in a country like India. Whereas when I compared the same numbers to developed economies, the same number is close to 60 to 70%. So there's a huge scope to have professional wealth management going in India and making it sure that those are the services we put together in our partnership and offer it to the Indian investors.
Very interesting. All right, let's also focus on the future of wealth tech out here. So, Karl, technology is changing wealth management everywhere, data, AI, automation, but there's always a human element needed in financial advice, especially in India. You know, we are banking someone with our hard-earned money. So, how are you planning to combine both of this and create a better client experience globally? Because, you know, we are looking at robo-advisory trend coming up in India, a lot of chatbots giving, you know, financial plans. A lot of broking firms are also trying it out. But then we still trust a human with our money.
Yeah, so it's a very good question. I think, first of all, you're always going to trust a human with your money because, I mean, I think a lot of wealth management is a little bit of like being a psychologist. You need to, you work a journey with the clients, you walk a journey with the clients, you provide advice to the clients, you provide, you're very important in the decisions. So you're actually kind of like a real top financial advisor to the client. So AI and technology is very important. So AI is going to help you to become more efficient, more effective. We're introducing AI significantly in our own processes. So we're very quicker in terms of developing product. We understand the products better. We bring AI into to better client services, to produce reports quickly, to help us with investment decisions. So it just brings a lot of efficiency into our business. But and technology is very important because it's very important to bring the product to the client. It's very important to bring transparency to the client. It's very important for the client to see if something happens in the market yesterday or this morning, what does it mean for their portfolio? How do you actually calm their fears? How do you answer their questions very quickly? How do you use technology to talk to them? To change the portfolios on quite quickly. So all of those things are very important in our industry, and it's making a big difference in our industry. But it's actually increasing the decision making and the quality of decision making in our industry, together with every other industry in the world. But at the end of the day, you do need an advisor to provide the right advice. And if I can come back to our experience in Africa and South Africa, which is an emerging market, a fast-growing emerging market, similar to India, at the end of the day, what we've seen is that when clients just use technology to buy product, they make decisions too quickly. They have too much information today to make decisions. They make the right decisions at the wrong time. They make the wrong decisions so it's a very difficult for them to have a sustainable portfolio that meets the client needs. So the individual and the intermediary plays a very important role. In South Africa, majority of our business is through intermediaries. Very limited, a limited part of that is through direct investment. And that is because once clients get to a certain investment threshold, we see that they start withdrawing the money, they spend the money on different products, on consumables. So an advisor is important to say, listen, there's a true north for you as a client. We invest for your goals. You work very hard. You need to leave a legacy. You need to look after your children. You need to save for your children's education. You need to save for healthcare. There's so many things that they need to save for, and the advisor is there to take them through that journey. So I think the importance of the advisor is more and more, even if technology and AI is there, because it helps the client to take out all the noise and all the information and actually distill it in a very clear conversation with the client and invest according to that.
All right. So, Vikas, now, how will you elaborate this for tier 2 and tier 3 markets? You know, how will you make investing simple for them? Because the kind of investor base that we are looking at right now, the participation is definitely increasing in equities. Okay, Vikas, but people are not coming from the point of view of being, being financially literate or having that information about equity as an investment instrument. They are looking at the markets, they're looking at the returns, and that's how they're participating. So how would you rope in all of this that Karl also highlighted, AI definitely being the future as far as investment industry is concerned, but then what about tier 2 and tier 3 markets where people are just trying to understand that yes, they can consider equity as an investment option apart from gold, property, and fixed deposit?
The equity participation, simply if you look at numbers, whether it's the IPO numbers, whether it's the SIP numbers, whether the mutual fund contributions coming in, clearly it's growing at a very, very fast pace. And I think you will see that more and more happening. Yes, you are right by the time saying that more and more financial literacy is important. So I think there is where the professional wealth management teams have to make sure that not only they cater to these clients, they handle these clients and take them through this journey. And I think that is what is happening. But take my word, what Karl just mentioned, I think AI will not only bring operational efficiency, but will help to make better portfolio decision as we go further. So in tier 2, tier 3 also, you will see this getting enacted and taking it in the same fashion as we go ahead.
Interesting. Karl, next question to you is, what trend do you believe will define the next decade for Indian investors? You know, since you highlighted passive investing, sustainability and global diversification, what trend you think will be dominating in India? Karl?
I think, first of all, it's a very, very fast-growing economy, right? It's an exciting economy to be part of, and I think you're going to see a significant number of industries actually expanding in the Indian market. So I think to sit from the outside and look into India and actually see all these opportunities and the consumer growth and new companies coming up in India and all the IPOs. So I think what's going to drive and the exciting part for Indian investors is actually just to participate in this, right? So there's no right time to say, listen, I'm going to be in healthcare, or I'm going to be in IT, or I'm going to be in property. I think the exciting opportunity is that you are actually one of the top 2 largest economies in the world. You've got the highest growth opportunity in the world, and there's going to be so many opportunities in India. So the biggest thing I think for the Indian investor is just start investing, make sure that you have a very good portfolio, a very good diversified portfolio, and the portfolio should actually help you participate in all these opportunities. If there's a new IPO, we should bring that opportunity to our clients. If there's a sector that's growing faster than another sector, we should bring that opportunity to the clients. But I think the Indian investors should just keep on investing and keep on stay invested in the market. And I think they will see significant growth in their portfolios over the next 10, 15 years. Compounded growth is the 8th wonder of the world, right? So you stay invested, you keep on adding to your returns. I think they would create significant wealth, and I think they would participate in a fantastic economy in the world. And I think also what we are going to bring to this market again is also access to very good products offshore. For those clients who do want to invest offshore, I think there's a very good product set there. That product set will participate in global markets. So I think it's an exciting opportunity for the Indian investor over the next 10 years.
Sure. Vikas, one last question and then we'll wrap up this show. From your ground level experience, Vikas, where do you see India's biggest long-term wealth creation opportunity now? Is it in equities, new financial products, or financial inclusion itself?
Think about it like this. I think financial inclusion is something which our government is driving, and so as all of us as participants to the same. But coming back to the asset classes, I think over a long period of time, different asset classes will perform differently. What is most important is to make sure that the right asset allocation is done. And that's the solution which we want to bring it on table. You would have time frames where equities will do better. You will have time frames where real estate will do better. You will have time frames where gold as an asset class will do better. I think it's about asset allocation. And we are of a strong belief that 90% of one's portfolio is generating returns only on asset allocation. So if you get that act right, I think everything else will follow. So stick to asset allocation. I think that's most important.
All right, staying diversified and diversified across asset classes is the mantra. So as we heard, India isn't just growing, it's maturing as an investment destination. Global players see it not just as a market, but as a partner, and Indian institutions are ensuring that this partnership translates into real value for everyday investors. Thank you so much, gentlemen, for being a part of this very interesting episode and having this chat with us. So for the viewers, the message for all of you is very clear. The future of wealth isn't about complexity, it's about clarity, transparency and long-term discipline. So that's all on The Money Show. Thank you so much for watching. Goodbye.